Hi there, good morning again and welcome to Market Insight. It's a beautiful Monday morning here in the city of Lagos. I'm hoping you had a wonderful weekend. I am David Chiedu. On the program today, we're taking a look at the power sector. But before I go any further, I'd like to ask you just one question. Do you at present enjoy your electricity supply? Do you find it affordable or not so much? Well, there are better days on the horizon as the Federal Ministry of Power and the United States Agency for International Development have signed a 115 billion naira memorandum of understanding to secure Nigeria's commitment to electricity sector reforms and expanding access to affordable power. Now, both parties announced this in a statement issued in Abuja by the Power Ministry last week. It is, for all intents and purposes, intended to provide a framework for partnership with other key actors, including state and local governments, electricity generation and distribution sectors, and also the off-grid sector. And of course, it is a significant milestone in the journey towards achieving a stable, sustainable, and of course, reliable electricity supply for all Nigerians. That would be you and I, by the way. So on Market Insight today, we discuss the federal government USAID MOU, which, is geared towards reshaping the electricity sector in the country. Let's take a look at what is happening on the Nigerian Exchange Group for just last week, the trading week that ended July 12. So the Nigerian Exchange started the second half of 2024 on a bearish note as the market has declined by 0.39% over the past 2 weeks, leading to 334 billion naira in its market cap. Now, at the close of the trading week ending Friday, July 12, 2024, on the Nigerian Stock Exchange, a total of 420,896,797 shares in 7,617 deals, corresponding to a market value of over 6.8 trillion naira, were traded. Now, compared with the previous exchange trading day, Thursday, July 11, there was a 42% improvement in volume, 25% improvement in turnover, and 7% improvement in deals. Now, the current market capitalization of the Nigerian Stock Exchange is 56.4 trillion naira. In the aggregate, 117 NGX-listed equities participated in trading, ending with 21 gainers and 23 losers. QTIX led the top 5 gainers with a 10% share price appreciation, closing at 4 naira 62 kobo per share, followed by Learn Africa, Caverton Offshore Support Group, and of course Honeywell Flour Mills. And then for the top 5 losers, Red Star Express came out with an end-of-day price appreciation of 9.8% at 4 naira 50 kobo per share, followed by Dar Communications, Guinness Nigeria, and Julius Berger Nigeria. And of course, regarding the performance of the NGX market indices, the benchmark NGX All-Share Index inched up 202.38 points to close at 99,671.28, representing a 1-week loss of 0.35%, a 4-week gain of 0.04%, and an overall year-to-date gain of 33.3%. Now, to talk more on this, we are being joined by the MD and CEO, Globalview Capital Limited, Mr. Aruna Kebira. He joins us this morning. Good morning, Mr. Kebira. Can you hear me?
Good morning. Good morning. Thank you for having me.
Now, Mr. Kebira, let's go through what happened, the previous week. Now, the bearish performance of the NGX is a stark contrast from the trends observed in the second half of last year comparatively. Now, last year, the market recorded much faster growth in the second half. Why is that? Why are we seeing what's happening right now in the second half of 2024 comparatively?
The goal of a discerning investor is to determine from which side his or her butter is our bread. His or her bread is better buttered. And every discerning investor is looking for better yields. And if you look at the recent figure from the MBS, capital importation into the country is in favor of the money and the physical market. It's not new to anybody that as inflation is increasing, the CBN have every reason to also try to rein in inflation by increasing the MPR. And by so doing, the rate that is in the money market and the fixed market is being raised. And a number of people discover that the money market and the physical market instrument, as far as investment in Nigeria is concerned, is regarded as risk-free. And it's also believed that the capital market is risky. So if you are getting a better yield, the money or the physical market, why not do it? So we're seeing a capital flight from the stock market to the physical market and the money market, because to now is the better yield for them. So that is, and when you take position in the money market, and maybe you get your position and you need to cover your position. Sometimes to do it at whatever discount you can get, you can give to the market, and it's so doing. And so doing, the number of investors will close their eye and exit the market because they know they have taken position somewhere. And it's that frenzy that normally lead to a slowdown in the prices of stock on the stock market.
Some would also argue that such growth in the market was linked to certain economic reforms, which strengthened investors' confidence in the equities market. But lately, we've seen that waning. What do you make of this?
What we are looking at is that what I heard from the last outing of the CBN governor, that the bank will continue to look at how to bring the rates down. But as far as the inflation is going up and the rates are also going up, I think the moment of respite is not yet to be seen in the capital market. But I might be actually forced to believe that today, this is the middle of July, and July is the moratorium period that's given to all issuers, especially those that have their year end as 31st of December to release their results. So chances are that from between now and the end of July, we'll begin to see results. But the question is, will they reflect of actually what happened in the quarter one? If yes, there's a way the market will actually try to recover. The only other thing again that may also subscribe to the recovery of the market is the dividend declaration. That is those that are paid interim. But if you also ask me why the dividend declaration may be there, maybe to stimulate the growth in the market, this current ongoing banking recapitalization is also draining money out of the stock market, because what is going to the one you use to buy either public offer or right is going directly to the pockets of the bank, not remaining in the capital market. So I'm also seeing capital flight from the capital market into the purses of these banks that are offering both the public offer and the right issue. And that may actually dampen. But the question is, what will be the effect? The effect of the good result for quarter two, the dividend declaration, or the capital flight because of the public offer and the right issue. It will not determine which direction the market will go between now and maybe this in the third quarter.
True. And of course, you've also mentioned some of the issues attributed to the bank recapitalization, as you were. Now, given the current upheavals in the market, as we've seen, or as we are seeing, and also by way of perhaps prognostication, are we expected to see something slightly different and, leaning towards the positive angle by the end of the trading year, because we're in the second half of the year?
Yes, if the experience we had 2004 after the recapitalization of the banks is anything to be reckoned with, I think there is a possibility. I am also thinking that the moment the banks are fully recapitalized, there's every possibility of a turnaround in the market. And something is also telling me too that there must actually, the offers we are seeing may have actually be subscribed. And the relating is that they needed to come to the market to fulfill all righteousness, to rein in the money. If you look at it, some are going for public offer, like GTCO is going for public offer, and the Fidelity is going for both public offer and right issue, while Access is going for only right issue. The confidence that GTCO has to go for only public offer is actually what I don't know, because it is believed that analysts have the belief that what we're going to be seeing more will have to be right issue to guide against hostile dilution of ownership and hostile takeover. But GTCO are going ahead to do a public offer, which means they're actually not afraid who is going to be around the corner that will be mopping up their shares. But I do believe too that immediately after the offer has succeeded, like I said, for the tier one bank, I believe that they already subscribed, which means that the possibility of successful outing is there. And the moment that is done and is concluded, we see a better market, Why am I saying so? The CBN has had them to recapitalize, and I believe that they have more money at their disposal. Where they could do business of 15 naira, they can now do the same business with 150. So it's going to increase their capacity utilization. And I believe that by so doing, they will make commensurate earnings the earnings that will be commensurate with the dilution in their shares. And at the end of the day, they can come out with either the same earning per share or better earning per share. I was having a discussion with somebody, and they was telling me that maybe they are going to draw down on their dividend payout, and said, if you look at it carefully, the banks don't pay more than 40%, the highest 40% of the earning per share. What this will only do to them is that in the interim, they can increase their payout from their earning per share, maybe 60%, 70%, and that will not cripple them, just to abandon and cross this recapitalization exercise period. I believe that after the recapitalization exercise period, the banking sector will become stronger, which are, whether we like it or not, they are the prime movers of the stock market.